Oh, Mr. Carr, I can't hear you. Talking to your microphone. All right. So basically, we are going to make a bounce in the equity. What will happen to the unexperienced trader intraday is the minute that they see it go up, they'll get in it, and then the stock will reverse like it just did. Just dropped 37 cents in that wick. And you're not going to be trained here at SMF to be one of them people. Because what happens is people buy on knee-jerk emotion instead of being an operator on the entry and the exit. And like I said in the first tape, this is tape number 2, is that we're recording the open. We've only been open 23 minutes. We went straight down. Our limit orders were down there. Before the market opened, I gave orders at 115.50 within 10 cents of that entry. We did have a couple of traders that have been around me for a number of years trading here know that I could be within 10 cents. They know by looking at that bottom support level that they could trade it and scalp it very quickly. But the new people that are here in the school and their apprenticeship program, they're not quite ready for doing that. So they're defining their best risk-reward entry ratio as a wholesale operator to the stock market. And we are going to get these calls at a very discounted price compared to the public. That's number one. Number two, I gave lower limit orders below the 115.60. And as long as I am staying within the 3-minute sell signal, I'm going to continue to go down to the lower wholesale price entry. And anything in between there, I'm going to watch the relationship between the buyer and the seller and the emotional state of the buyer and the seller during this element of time. Not only am I going to be monitoring those vitals of the patient, I'm also monitoring the vitals of the 15-minute sell signal and the RSI crossover and the 15-minute period moving averages and what's that resistance. And as I use my 30 years of experience, that's what your trade is behind. As you're learning, that's what your trade is behind. And if you don't believe me, you watch where the public is and you watch where you're going to be. And that's where the public is. We're down here. We're at the bottom of the barrel, boys and girls. And we will continue. The 15-minute chart has got resistance. It's selling off into the 20-minute period, the moving average right there on the 15-minute chart. Now, put those calls down there at $3.78. Senior traders on the other system, put them down there for the glory trade. We just hit 115.49, and if you would have got hit at 115.50, you would be protecting your stock market order, wouldn't you, Bridget? I was within 1 penny off of the low before the stock market opened and when the price was up at the highs. Anybody in denial? But I dropped your order down to 114.75, and I canceled it as long as I'm in that 3-minute sell signal over here, and as long as I'm selling that resistance over there. If you would have got hit, you could be coming out of the trade. The difference between you and the public is that you're operating on 30 years of freaking experience right here and now. And you go show me anyone else in the world that can do that. Because it was called before the market opened. And we took the risk out of the trade. So when people ask me, well, why do you give people money to trade with? Well, hey, if I didn't know what I was doing, I wouldn't give you a red nickel. Who's tape? Here, let us not be in denial. Here are the call options on Amazon that I gave a $4.50 buy. I took them down to $3.70. When they were at $6.60 before the market closed, it was closed before the market opened, I gave limit orders right here at $4.50. Is anybody in denial? Is anybody in this group or attending this free trial in denial that Mario said to buy at 450 when they were up at 660? Is anybody in denial? Okay. Are you witnessing the truth? I took them down to 370. Is anybody in denial? Cancel that one. Cancel the limit order on Amazon and take it down to 114.25. Take it down. Take it down. Cancel. Let us not be in denial. If the traders would have got hit, I dropped the order down to 114.75. If they got hit, they could be coming out. They're always wholesale to the entry. The public is getting their head handed to them. That's the reality. That's 30 years of veteran trading talent. This is what you want to be behind. This is what you want in your life. This is what you want to be trained how to do. Put that order down to 114.25 where I dropped it. And let's let that bottom get put in. Remember, we bounced $4 off that bottom. And Bridget, yesterday you were given an order at 420. Did it hit my 420? Yes, it did. Ha, ha, ha. Put those orders down there. Let that stock bounce until we put in that bottom. And I want to know if there's anybody in denial about that these orders were called out way before the market started. And the public is retail, and an SMF Pro trader lives and dies for the wholesale entry. Because that's what I live my life for. I live my life for wholesale, not retail.